I think never fall into the trap of going by the language or the words or the vocabulary which people use, because the reality more often than not is actually very different. A lot of people feel that the decisions in financial services are taken on the cold preface of whether the pricing is good, whether the ticket size is completely wrong, wholesomely wrong. A lot of people decide because of convenience, because of the dignified thing. They don't have to go and shop around.
You can paint a big picture, but to get to the big picture is a lot of congruent steps, and those steps have to be clear in a founder's head, right? You use the word dignity, which is we never hear of this in fintech normally it is faster loan, lower rate, better turnaround time, better risk, etc., etc. But how did this dignity come about? Good evening, everyone. My name is Susmit Patodia. I work with Antler in India, and with me I have Ranvir Singh, whom I've had the privilege of knowing for over 20 years now. We went to the same B school together, but very different in the rankings. So Ranvir is, as all of you know, is the founder and CEO of Kissht, also known as Ring. Fascinating story. I think one of the most under-talked about fintechs in India. I think the biggest reason is because they have not been in trouble by the RBI, and that's why we don't know much about them. But just to give you a few statistics before I let Ranvir introduce and talk a little bit about himself. So Kissht is in its 8th year, 3,500 crore loan book, 250 crores of profit, 11 million customers, right? Let the numbers sink in. These are phenomenal numbers. I have not come across a fintech firm in a long time which has been able to achieve this scale so fast, right? So it's truly commendable. It also shows that if you do it the right way, there is money to be made in India in lending. So with that, request everyone to give him a round of applause and welcome Ranvir. So Ranvir, IIT Bombay, I'm Bangalore, McKinsey, then started his own consulting firm before starting Kissht in 2017. So let's go back to the famous plane ride discussion near the bathroom between the two founders. Maybe we start from there. That's probably the -1 to 0 journey of Kissht. So yeah, over to you.
First of all, thanks Susmit, and thank you everybody for having me here. Always a pleasure to meet Susmit for all the great memories we hold. But no guys, really as I was sharing, flattered to be part of this session. Happy to share my experience, anything and everything. Please feel free to ask. Happy to share whatever I can. But very glad and almost a pleasure to be here. Talking about the specific incident which Susmit is mentioning, and it's basically how we started the company. So when we were doing consulting, when I say we, it is me and my other co-founder. His name is Krishnan Vishwanathan. We were in McKinsey together. We were coming from Patna of all places, and we were in a flight, in a plane, and we are basically bitching about life, we need to do something else, etc., etc. And that time the word unicorn was still not as commonly and flauntingly mentioned than it was then. I think the companies were at 100 million type, and we were talking about, we need to do something. And I remember we were in the plane and we were sitting, it was an Indigo flight. We were both sitting on the aisle, and I think it was 31 or 32 number, so next to the loo. So, and we were trying to negotiate our discussion as people were trying to use the loo. And we were talking about, we need to do this, we need to do that. We are talking about the UPI is coming up and something else is coming up. And that was the most, call it the inaugural discussion of starting something like this. and we had to take hiatus or some gap in our discussion because there will be a queue which will get formed. And it all started, as lame as it may sound, because when we got out, we're just crossing the gangway. We decided, okay, we keep talking about many things, but we never do. So this time, these are the things we need to do. These are the 3 things we will do, 4 things I will do. Fine, and let's meet again and talk about whether the market is ripe, whether we can create the right proposition, so on and so forth. So that's how we started it, and that's the incident which Susmit was referring to.
So when you started your journey, just think back to 2017. I don't know how many of you would remember then. We were having the advent of UPI. We were having Jandhan, bank accounts for everyone, Aadhaar, and Geo, right? All this came together. We almost call this the Lollapalooza effect for the fintech lending in India. Can you take us through how you were thinking about it then, with all these things coming together?
Sure. See, as much as, in retrospect, we see some of these trends and they seem almost blazing a new trail, if not mapping of new frontiers happening. It didn't look like that then. And the point I wanted to make is, as much as, it didn't look like a great trend which we are trying to capture, even today, as you think, there are so much of dynamicism which is happening, many trends. Being able to capture and then play on that is one thing which comes to my mind. But if I go back, 2017, couple of things which are going in our mind. Of course, the newspaper then were also flooded with new companies coming in. There's a whole overcrowding. Something or the other is happening in fintech. That hasn't changed then as it has, and since then it has not changed. I think the thought for us was as follows. We said there are big gaps in the market which exist, and is there a way to target this gap or the white spaces where one can create something while competing with the stalwarts which already existed in the market, which are the incumbents, which I'm sure is there in any sector you talk about, be it fintech, be it healthcare, anywhere. And the discussion was more to say that with the advent of all these new things which are coming up, is it changing the league table? Is it allowing us to create something which will be our niche, our differentiation, while serving a set of customers? And the thought was as simple as the day can be long then, to say, can we use some of these technology and create something which will allow us to offer credit in a very seamless, dignified, unhassled, almost on a mobile app. I was sharing with this thing with your colleagues that it is very obvious now, was not so obvious then, and that was the germination of our thinking. Of course, once you have defined the canvas saying this is where you want to operate, you get to the second bigger problem, which is to say, how would you deliver it? So a lot of thinking, discussion, deliberation, thoughts that time were around how to create a business model which can help deliver this specific offering that we want to design in the ecosystem, which is rather evolving, and some punts that we are making on how it would look like in future. So those were some of the thoughts which went in designing the first offering, if you may.
You use the word dignity, which is, we never hear of this in fintech normally. Normally it is faster loan, lower rate, better turnaround time, better risk, etc., etc. But how did this dignity come about?
See, here again, not to preface it with a learning, I think never fall into the trap of going by the language or the words or the vocabulary which people use. Because the reality, more often than not, is actually very different. Talking about dignity, see, when you are catering to a segment which I am catering to, I can tell you it is not an easy process to go to a bank and ask for a credit. And I'm not belittling bank, right? Banks perhaps are fair in terms of the process that they follow. But what came out very clearly when we interacted with customers, or when we understood, why credit is not so pervasive, as much as everybody wants to give credit to somebody who is holier than thou, who is, above every grade. And a normal person who otherwise may be having income, but a very, very, I would say, very unsettling kind of an income, not a regular one. It can change overnight, over months, over a year. For them, the experience of going to a bank where a bank officer will almost evaluate you, she will not only ask about you, but all your, forefathers and everybody. It is never a very easy process, right? It's almost taking away. It's almost divide between somebody is giving and somebody is taking. And one of the thought which was also in our mind, which was very strong then, is we should try bridging that gap. Just because you are giving credit, you are not doing some help of any manner. If anything, the guy is doing help because he's becoming our customer, and then we all know the benefits of having a customer who can last much longer than. So that's the thing, and I think it has proven out very well. I don't want to digress from the question, but perhaps it's a subject worthy of digression. A lot of people feel that the decisions in financial services are taken on the cold preface of whether the pricing is good, whether the ticket size is completely wrong, wholesomely wrong. A lot of people decide because of convenience, because of the dignified thing. They don't have to go and shop around. This whole mobile-led loan also gives you the offering of, nobody knows about that. As simple as that, right? I'm taking a loan. So I think those are some of the factors which which are equally strong, if not more, when it comes to not only lending, but for that matter, any other services that you are talking about, be in financial services or otherwise as well. And picking those things is absolutely critical. I think you are absolutely right. We all talk about fast turnaround time, many other things, but to have a sense of experience which is dignified is rather rare in this market.
And you, very interestingly, you also somewhere mentioned that this cohort of yours is actually as good, if not better, than certain cohorts of salaried employees. And you think this is because the fact that you let them get a loan dignified leads them to loyalty to your. Is that how the cycle or the flywheel works?
It definitely is a big factor in that. I think as you are building your companies, one of the things you will learn, or perhaps have already learned, is a delighted customer goes a long way in terms of showing a loyalty which is unparalleled. I'm a living evidence of, or not, my business is a living evidence of where a customer who was not being catered by anybody else, or even if it was catered by banks, it was always underserved. They cannot give him a loan of say more than 2 lakhs. I may be ready to underwrite them for 5 lakhs, and that too with a process which is perhaps a puny fraction of what they may have to go through. No submission of document, no, you don't have to waste your shoe leather going to the branches of a bank and so on and so forth. And this is the same customer who once come in, they are not worried about pricing. They are not to say that we need to charge higher pricing, but I'm saying one of the other myths which has existed in this market, and I believe very true in other places, is a proposition which is purely on pricing is very ephemeral. It cannot sustain beyond a point. The only thing which can sustain is the experience that you have created and that registering of experience which has happened in the customer's mind, which go a long way in the stickiness and the loyalty that they show. So definitely it has contributed in a big way. I'm never tired of sharing this, that in my portfolio I have salaried customers and I have self-employed. The self-employed customers are, as you know, they are business owners. They are running their this thing. They have uneven cash flows. Sometimes unevenness to an extent that no level of data model or no level of, the analysis, some of the thing which traditional banks will do can ever understand that. But the fact that I'm able to serve these customers goes a long way in the way they behave on the risk side. Their risks are much better. The loyalty they show is much better. I think the word you use is CLTV, the customer lifetime value. Customer lifetime value is an order of magnitude higher than what you may find for a salaried customer, where I think there are many people who he or she can shop with. So definitely a very, very cardinal factor in terms of retaining and further strengthening the relationship with a customer.
If if I may just double click on this whole self-employed, right? I mean, this is kind of a black box for most, at least VCs and a few founders, because we don't interact with that community. Can you shed some light on how their behavior is? Are they as uh, desirous as the salaried people that we see? Do you see them, upsizing that purchase from a 32-inch TV to a 42-inch TV? Uh, would love for you to double click on self-employed.
Oh, absolutely. And I agree, Susmit, that this is a segment which is very less understood, perhaps lesser served as well because of the, the endemic which exists in not understanding them. Couple of things I would say. First, I think these are nameless, unrecorded, almost 200 in the Indian milieu, 200 million in the Indian milieu. So it's a large opportunity we are talking about. If you throw a stone in India, a hypothetical stone, trying to figure out whether it will hit a salaried or a self-employed, I think 8.5, 9 chances that it will hit a self-employed than a salaried guy, just to tell you the order of magnitude difference between salaried versus self-employed. Second, they go through bizarre vicissitudes of life. Their life is not as simple as every month, first, second, you get the salary. Their troubles and problems are no different than a founder's troubles and problems, so very similar to that. But they have to plan their expenses. They are always trying to manage a tight balance, tightrope they are walking on or trying to negotiate, which is of trying to meet many ends meet, right? Not only the business related but consumption related. The other behavior that is there among this segment is there is barely a line between their professional and the business life. So when I give loan to them, though I understand that they are people who are using this loan for business purposes more often than not, for working capital, but I can't be sure, sometimes they use it for their consumption purposes as well. So the line between consumption and business usage is rather blur. Because they have been underserved, one of the psychological trait that you see is they do value propositions which are perhaps as given, taken for granted, and hence you can create a very different level of relationship and recall when it comes to offering to them. In the past, I think the traditional players have served them grudgingly because it doesn't come out in a very templated, simple manner on how to assess them, what offering to create. They come from a mosaic of, I would say, many trades, maybe 1,000, maybe 80, maybe 50, depending upon how you define. They can be in the value chain of retail, they can be in the value chain of shoe business, right from making laces to leather to everything. So there is that heterogeneity which exists with this segment. But if one can see the right patterns, one can serve them in the right way, the rewards can also be rather unmatchable. So that's the segment that we of course have doubled down more than a traditional player would do.
Interesting. Just to go back to your day zero product offering, you started with consumer durable financing, and there was this big daddy Bajaj Finance, which was pretty much in every store that we walked in. And I still remember as a customer, I never understood how were they offering 0% EMI loan, 0% interest rate EMI. I thought it was a scam. But obviously then you realize later that they actually took it from the OEMs and not from the customer. But did you ever think twice, like, am I doing this right? Because a lot of founders sometimes get intimidated by a large player already there and do not take the leap, right? Obviously, when you started, it was 100%, was 40%, then now it's less than 1% of your loan book. But when you started, how did the whole thought process work that I'm going to go up against somebody like Bajaj Finance?
Yeah, no, you're absolutely right. Bajaj has been a behemoth, and they have been one for many years. As much as it was difficult, what was also easy to find that there are many places where there is, I would not say revolution waiting to happen, but a big shift waiting to happen in the way the business is run. Let me jog my memory and talk about what happened then. If you walk into any store, I've done this exercise in tier 1 town, I've done it in tier 2, I would request do that ever, you would rather vehemently agree with me. You go into a store and say, what portion of your sale happens on credit? The lowest I've heard is 20%, highest I've heard is 85-90%, perhaps the average is around 35-40%. And this holds true for anything. Bajaj owns 70% of that sales. They have captured all the consumer durable. I can't think of, this can be given as a treasure hunt exercise where you know the results very well, to say, is there a store you can find out where Bajaj is not present? The answer is resounding no. So when you start in a business like that, of course, you go with the same trepidations which you are talking about. How can you compete with them? But having said that, there are a couple of learnings I had from those days, and maybe give you some cues in terms of how to think about similar ones in different segments. First of all, the process is a very manual one. Not all stores, but a vast majority of the stores have a person sitting. We all, I think, have gone through the experience of entering into Chroma, and there is a guy who will all of a sudden appear when you are just about to, sign on the dotted line and say, I want this TV, and he said, no, not now, you can do better, right? And that's a guy who comes in. So a couple of things which, at least for learning, we had, and I say it with all humility, I have a great deal of respect for this company. They have created a good, identified and had a hegemony when it comes to holding a numero uno position in the segment. I think after a few months of operation, we realized in all humility, we cannot compete with Bajaj. Not because they had cost of fund advantage. I don't want to make the discussion technical. Cost of fund is basically the rate at which they can borrow and then lend and hence earn a much higher margin than what I can do for the same set of customer. But because they had a partial stranglehold on the dealers. So what would happen is, if Bajaj is present, which is getting 70% of the volume, I am present along with 5 other players. People have forgotten those names because this is a business where every season one new player will come, try to build this, they will disappear, but Bajaj was a constant fixture. We would first of all get a small volume, which is fine because we didn't have the capital to serve a large volume. So let the Bajaj take 70%. But the bigger problem was, when you are coexisting with Bajaj, all the good customers, the people you would crave for, you will give the red carpet welcome, they have all gone to Bajaj, and what you are left with is only the residuals and the vestiges of people who are coming, which is exactly the one you don't want. And then, given the communications are always verbal and vague and amorphous, we'll always get this feedback, oh, Bajaj is approving so much, you can't do this, etc. It's a game ripe for people to lose. It took me a few months to understand that. Once we understood, we flipped the model. The biggest thing that we have done, why we acquired such large 10, 11 million customers, 11.5 odd million customers today, we followed exactly the same model. Today, Bajaj has 90,000 stores, I have 300,000 stores, but not a single store is the one where consumer durable is sold. I said I will have the monopoly position with all the merchants, but never in a store where somebody else is also present. What are these stores? These are pharmacies, these are clothing stores, food outlets, kirana store, you name it, sports equipment, etc., where you would not, the ticket sizes are low. Ticket sizes are not 25,000, they are more like 2-3,000. And that's where one has to create a product which caters to that segment. That's number one. Number two, there is no way, we don't have the wherewithal of deploying so many people who will be standing there. The cost just doesn't make sense. I don't think we invented it, but perhaps we have a better claim to invention than anybody else. We created what is called as a credit QR code. We put the QR code at the merchant's place and basically said that if a customer comes in, you nudge the customer that you can pay by debit card, credit card, UPI, etc. You can also request the customer to take something on credit. And unlike the traditional Bajaj model and many other people have followed, it was no manual thing at all. what am I benefiting with this? Because all these stores were a congregation of 200, 300 people who will come every day. They see and they started scanning, getting into our app, and we were getting customers. So the point I'm making is, as much as there was a sense of fear, there was almost by and large, you can say, wherever you have a player, there's an incumbency position. One way to think of business model is, what are the gaps? Do you have a business model to play in that gap? Of course, in retrospect, some of these stories can be said with a lot of gusto and a lot of, winner kind of a mindset. But to make that happen was not easy. To create that proposition was not easy. So as much as there was an element of, we are dealing with a big this thing, there was also a crevice of opportunity which was there, which made us play in this space.
Very interesting. So, Ranvir, did you ever think when you started doing the 2000 rupees thing that you will reach 1 crore customers? Because otherwise, how did you raise capital? Because no VC would have allowed you to do that math, which is 1 crore customers to आपको भी पहुंच ही नहीं पाओगे. So how did you bridge that storytelling gap, and even in your head?
Yeah, so you're absolutely right. So I don't think when we started, we ever thought that one would have such large base of customer. We were also, as much as we were thinking about next 5 years, we were also thinking about what happens in the next 6 months. So most of the discussion with the VCs and the incoming investor was to paint a story, what will happen now. And there's always this dilemma, I don't know whether you also go through, at least I went through, how much to claim versus how much to demonstrate, right? So there is that age-old dichotomy we all live through. So one doesn't have the foresight to say one will have 1 crore customers, but one could see, okay, if you have so many stores, perhaps you can have 50,000 customers, and then 50,000 can become 5 lakh, and then a great deal more. So it happened more in phases. I think it's very important to define what is the product we were offering, right? We all know that people are not going to take loan for 2,000 bucks, but the purchases are 2,000. So we created a product which was, say, I give you a limit of, say, 15 to 20,000, use it there and use it in any other place. I have partnership with Flipkart, I have partnership with Amazon, so you can use it there. And if you don't want to use it there, then given the UPI, make 2 more clicks, transfer it in your bank account and use it wherever. You want to make a rent payment, transfer it to your friend, do that. Of course, bank transfer comes with some additional cost. So those are some of the, economics issue that you have to figure out in terms of how you price one versus the other. But those were some of the considerations which are far more paramount in terms of deciding and then building the vision for next 6 months and future.
Yeah, I think this is at least a very, very important takeaway for me from this entire journey is that, you can paint a big picture, but to get to the big picture is a lot of congruent steps. And those steps have to be clear in a founder's head, right? In India, the easiest thing to do is paint a 1 crore number, right? Anything can be done 1 crore, but sometimes nothing can be done with 10,000, right? And we'll still try to reach 1 crore. So that's been like one of my biggest learnings from Ranvir's journey. Just shifting tracks a little bit, can you describe your first 10 hires / people that you worked with? We've heard some advice that your first 5 to 10 should be generalist because you just need to go all ballistic. Some people say that in lending you have to be super careful. So would love to hear your views on.
Yeah. No, very good question. I hope my memory is not deserting me here, but if I think about the first 10 hires, they came largely from 3 different categories, genre, whatever you call it. There was the first set of people, and I hate using the word hustler. That's not something which is very enamoring, at least I feel, but there was the first set of people, maybe 3, 4 out of 10, who were just the doer. They were the quote unquote generalist. They can do today X, and they can do collections as well, they can do customer design as well. They were just people who can deliver and deliver in a time-bound manner with some level of fluency and fervor which is required in a situation like this. One area where we were definitely looking for a specialist is product and technology. It's an area where, and analytics. This is an area which is not amenable for any journalist to come and start adding value. The vast possibilities of analytics can be massive. To get a specialist and to further build on that, I think was the other thing to look at. The third one was, I would not call it conscious keeper, but or traditional folks. There were also one or two in the team who were always saying, this is not how it happens in normal this thing. And I think not that we had them for some malicious intent, just to tell us not to fall into that trap, or just to tell us where we need to push the boundaries. But they actually did a good job of just saying, this is how it happens. Because a very, it's important to be grounded in also knowing what is the lay of the, landscape there, and what is the way, so that you know what are the lacunas, what are the gaps, and what are the gulfs that you can bridge. So that's the other thing.
Very interesting. Doers, analysts, and guardrails, right? Super interesting. If I can just fast forward a little bit, which is, you had this small event which caused a little bit of sine wave in your business called COVID. So how did you go through that? And I think, frankly, for any lending organization, especially not yet as big or systemically important as the RBI calls it, for Kissht, it probably could have been almost lights off moment. And these are the kind of moments that a lot of our founders go through. So, if you can just, I don't want you to live it. I'm sure it's not a great experience to live it, but a few things that our founders can learn from that.
Oh, many learnings from there, and I'm sure as much as you have learnings in your personal life, and I have one in commercials, and I'll share some. Few things which come to my mind immediately. First is the perils of overconfidence. And I was sharing with your colleague some time back, sometimes how it is so important to betray your biases as against believe that you have got everything right. We were just at this rather turn and cusp of, getting from, say, 1 million customer to many more million, and nothing can go wrong types. I remember we were one of the companies which took maybe the last one, not only among the traditional players, but even the Fintech brethren who I compete with. I think it 24th or 25th March was the last loan that was given. Almost 120 hours back, which is 5 days back, we were all discussing that should we stop the business now, should we not, and we'll do some calculation. I said, no, it can be bad, but it can't be so bad, right? We'll continue. And I think just because we continued for those additional 3 days, perhaps there was a hole in my book of 50 crore more. That time, if one has the foresight of saying...
What was your profit?
Oh, that time it was much lesser. It was, in fact, we were break even, and we had to incur losses for that month, for that particular year and all. It was minus 59 for that year, and then of course 75 and then 120 and all that. But so that was one learning. I think after having done that, unlike many other businesses in financing, you cannot be having capital lying idle. You have to deploy it. So the double whammy was not only what business that you did was not so great, because some of the numbers that I would see is, I don't want to make the discussion technical, but just to give you a full picture of that. So every time I give a loan, close to around 92 to 93% of the customer, they pay on time. Without any prodding, without any nudge, without any reminder, they 90 to 93, they pay on time. This 90 to 93 number was coming every hour by 1-2% down.
Every hour.
Every hour one can see, because you can actually see those numbers. You can for a large base of customer, you can estimate the same 90 to 93 at an hourly level and get to. And the worst, it came down to 38. Anybody who knows the business would also appreciate 38 means not only you have lost your pant and shirt, but perhaps a great deal more. And so so we went through that experience, and it was, of course, I think the only solace was that I was not the only one. Everybody else was going through. Sometimes you take, I mean, we all know the pleasures of self-pity. So that was one. I think the other was, I think one advice if I can give, and I don't want to sound very, pedantic here, is 2-3 months have elapsed. One of the big questions we were asking, the world has seen the lockdown and the revival of a short period, and then again a lockdown and things like that. We were talking about, should we restart the business? And I think some call it a courageous call that time to say, okay, let's restart. We cannot restart full. We'll start a small fraction, almost 20% of the business, with a set of customers who we know are absolutely best of best. And that also kept us in a good stead. I think for good 2-3 months, I know when the entire banking industry, at least as far as lending was concerned, was in a slumber for a rather long one. We started the business, which actually created this whole funnel of customers coming in, paying, creating the momentum, etc., etc. Old ones also coming in, and it actually paved the way for us to. So I think the learning was sometimes you have to go with your gut, take some courageous call. Don't let your actions driven by your insecurities, but whatever you feel objectively, and of course every decision has this element of luck and an element of gut, the punt and speculation. So taking those bold calls at the right time is also very, very critical. And of course, what we know, what happened post that, I don't know if you know, in financial services, the recovery in post-COVID was so good that it almost made what happened look like a blip. But it's easier to remember facts than feelings. We all know what feelings we have gone through. It was quite something.
Interesting. I'll have 2 more questions before I open it up for everyone here. First one is, the most interesting part about what I've seen with you, Ranvir, is that you talk a lot about data analytics, and all of us do. Most fintech founders are fantastic at data, analytics, opportunity, but you actually bet on it, right? Which to me has been, I've known a few, investors who actually make money, most of them. Everybody sees the same analysis, but the best investors are who actually act on that analysis, right? In the last few hours and a few years that I've seen you, you've always spoken about data, but you bet on that data, right? Which is a very, very interesting behavior, and I think maybe that is one of the biggest unlocks of your success. I mean, we have to do some pattern matching, so excuses for that, but one of the biggest unlocks. And can you just talk about it? How did you get the conviction? I'm sure every one of us here has seen some data, some gap, saying, you know what, there is this, we will go for it. But how did you get the conviction to go bet on it?
Yeah, no, Susmit, it's a very, very good question, and it makes me think also quite a bit. I'm a believer that there is no divine knowledge you can get. The knowledge can come only from 2 sources. One, you understand the customer. There are many ways to understand the customer behavior, form hypothesis defined as some intelligent guess you make in your mind. Some of them are provable through data, some of them are not provable through data, etc., etc. And that's where sometimes the conviction on what you believe becomes more important. And the second is by data. There is vast amount of data, which one is of course the pattern making part of it, but there is enough and more. Data speaks in that sense. And call it my upbringing, or sometimes you excel in the way you see things. There is always an element of looking at data and then deciding. But dare I say, it's one of those. It's not some hollow confidence which comes just because you believe in that. And there is a lot of, I would say, piloting of things, looking at data, be ready to change, being truly a student of data as against. See, we all run with this hypothesis, we all get into the trap, I myself, where data comes secondary, you believe in something, and data is just to prove, and the bias is something so strong that, it's very, very indistinguishable. I don't want to overdraw the contrast, but we all have been. But being able to objectively see things and say this makes sense, this doesn't make sense, here is an opportunity, here it is not, I think goes a long way. And I think it's more to do with how one has seen maybe in the earlier McKinsey life or otherwise, to see sometimes these data gaps can be very, very revealing, and to make a punt and build conviction goes a long way.
Very interesting. My last question is, if you were a founder again today, three areas that you would love to start tinkering in.
Oh, that's a good one. I think in fintech or otherwise as well?
Wherever.
Okay. I think in fintech, I would definitely go into creating enabling services. When I say enabling services, there is a whole host of SaaS which is being provided, or collections as a service which is being provided, or if not anything, how do you add a layer of product over and above the credit that is close to around 10-12 different themes. One can pick one of them, and I believe they are all unicorn worthy. So that's one. Second, I would say maybe because it's a segment I understand, the segment I cater to. These are people from who earn between 25,000 till 1,50,000 kind of a segment. 50% self-employed, 50% salaried. Basically, giving them a whole host of financial services product. This is a segment where there is a huge under-penetration also. Talk about any product, be it unsecured personal loan, which I'm doing, but there are many even secured product if you talk about. The opportunity to deliver something using technology is massive. The usage of technology is very, very minimal there. And when I say technology, I mean not only the plain vanilla workflow system and being able to serve, etc., CRM system. No, I'm also talking about layers of AI, all that being built. So that's the second thing. The third, I would say, but it may be a very, very vast field in itself, is the education field, which may be of excitement for me. That's a space where I feel a lot more can go in.
Super interesting. Three solid ideas. Just our hypothesis at Antler, and I want to use the word hypothesis, not thesis, is we believe this is the largest profit pool in India, waiting for founders to take a knock at. I don't know, guys, if you know, but NBFCs and banks put together last year made 5 lakh crores of profit. Right, 5 lakh crores of profit. So that's really the largest profit pool in India. We continue to be surprised at Antler when we see people going behind food delivery where it's 10 rupees an order and ignoring 5 lakh crores of profit that is out there. We believe that enterprise, if the last 8 years, if people like Ranvir have been able to crack consumer lending, we think enterprise lending moment may have come with GST, Vahan. If you put all these data points together, right, it's almost like a Sybil moment happening in enterprise for us. So we are very bullish on fintech. As a firm, we believe that this is probably the decade for many more unicorns. The first one being Kissht, obviously.
Hi, I'm Riddhi, and Ranvir and I started around the same time. I co-founded Phenomena. So, hi. So I'll ask a question which most founders here to one actually care about. Most founders here to one care about their first 2 fundraisers, like you said, right? And when we're honest, it was the first time I'm hearing you speak in person, so wonderful job. Founders here to one care about their first 2 fundraisers, like you said, right? And when we're honest, it was the first time I'm hearing you speak in person, so wonderful job.
Pleasure's all mine.
So we actually had very similar approaches, and so I think I'll ask a question which is founder related, which is when a founder is fundraising, and you have 1 million competitors, and optically to a VC, it seems very similar. How do you as a founder storytell a differentiated product plus GTM plus business model in a very fast moving climate while you're fundraising, while let's say 20 of your competitors have raised their 2 millions and you've come in, and again, optically it looks very similar, but you know why you're different.
Very tough question, but no, thanks for very
Very real
glad,
question.
very real question, and no, thanks for asking this. Very pertinent for the audience that one is there. Um, my experience, I feel not a week goes by, or even then, when a new fintech will come, they are all there in the market. Almost everybody is basically talking about the same story, and you are just beginning to get into the game. There are a few things which go a long way. As much as there is a huge number of competitors in the market, and they all come with an eloquence, perhaps a spontaneous eloquence, which is unmatchable. But I also feel here is a market which is devoid of differentiation. By and large, one of the biggest trap I have seen many young guys who are trying to raise money, some biases, by and large, not true for all. Simple questions like, what is your differentiation? I don't want to make it sound that it is all about English and storytelling. Of course, these are matters which go beyond this thing, but the content part of it, how are you going to be different? The level of evasiveness which exists on a question like this is massive. So my first advice would be, whenever you are going into this, or at least we tried doing this, is never evade that question. Answer it to the core. Very difficult thing to answer, and hence there is a need to think and build conviction, etc., around it. That's number one. Number two, a doubly difficult question which comes. More often than not, people have not given the extent of detail or extent of thinking which is required on how. Fine, it exists. Market is big. You have the differentiation. How are you going to deliver? So that's the second thing which can add a flavor in the storytelling, which perhaps can be a differentiation, because many people, and I would not say many people, maybe some do it well, some don't, to talk about how part of it. And how also, sometimes I don't need to teach you storytelling. Some of you are far better storyteller than me. You have to come with a position of prominence. Why somebody should believe that when you say how, the belief, confidence, conviction is more than somebody else talking about it. So that's the second thing I would say. Third, I think there are basics of how to make money in a business. People tend to ignore it, underemphasize, or rather, relegate it to lumber room. Those concerns are as simple as, what is the unit economics? What is when the operating leverage will come in? It may gratify some investor, it may not gratify another set of investor. But even when you are starting a business which is going to break even after 8 years and perhaps give money after 10, another 10, and may never create value, but to have a foresight or have a plan to say how my unit economics may look like today versus what may look like tomorrow, and how the operating leverage will build in, which might be a slightly numerical discussion, but you'll have to play to the galleries depending upon what they are asking versus what you are wanting to say, what they are wanting to hear versus what you are wanting to say, can go a long way in creating the right connect, right differentiation. And of course, you have to tailor it depending upon who you are talking to. We all know some investors have a bias for one versus the other. So there is that element too, which goes in.
How did you manage regulatory compliance with your core business activities? Because typically in the news, that's when fintech companies usually come to the news, right? When they fall foul of the RBI or whatever compliances are there. So how did you manage that?
Yeah, I think, first of all, I should say that RBI, the regulator, in my case, they have shown an iron will in terms of ensuring that they are a guardian of fair and honest play, if you may. It is not that difficult. Unfortunately, it is talked about in an era where these things have taken a press coverage, and one may say that some of the prescriptions are underdiagnosed and overprescribed in that sense. But having seen this business and having had the benefit of not only reading these news but having a bilateral conversation with RBI, some of them are very logical. I think a few things which go in the way of ensuring the compliance can be high. As much as we may be flying in our high horses of making our number go from X to 10X, 1 million to 10 million, there are few elements one can build early on where that maybe that 1 million will not go to 10 million, it will only go to 8 million. But this will go with a model which is 100% compliant. More a mindset thing, and the mindset thing translated into your day-to-day business operation. It's very difficult to implement. I can understand the dilemma a founder goes through when they are trying to manage this thing, and all of a sudden, when one has not heard compliance and regulation to put into the system, which will further drop your trajectory or the inflection point by a good tad there. So having that mindset is very critical. Having that head over your shoulder that you are into a business which is regulated, and there are people who can come in and who will you'll have to be answerable to, I think is the single most reason. There are other things which is how do you percolate within the organization. Everybody gets it. We all are sensitive towards it, so on and so forth. There is also an element of being open, having an open dialogue with the regulator. As much as we feel that people like RBI are, sitting on a different, ivory tower and very difficult to, absolutely wrong. You can have a dialogue with them, get their input early on, and they in fact are also waiting to participate in that discussion. But for some reason, we have made this, mythical thing around RBI that no, they don't take input. Oh, they have shown a very different level of maturity in terms of taking input, responding to some of those input and concocting a policy which actually takes some of these inputs. So having a dialogue is the second thing which comes to my mind. Sure.
Yeah, you talked about the differentiation point, right? On the.
You can stand up so everybody can see. Yeah.
So you talked about the differentiation point. Now, tactically, I would like to learn from you. There's always that anchoring bias on the differentiation. So if someone is talking about, I'll make it very, very simple, right? Someone says that you're creating shirts. In that case of shirt, the shirt could be very, very differentiated how a customer looks at it. But to an unknown who does not understand shirt, and you go to them and they may say, oh, you're in a business of shirt, how is it different? Now, would you really make or educate that person to first get their anchoring right and then answer the differentiation question? Or you start doing your sell and say, oh, this is how we are differentiated, and you're putting them into another box again?
Difficult for me to answer, to be very candid on this, because there are instances when you have an industry which you are going to talk about, and it's very difficult for the investor to hear and understand the differentiation part that you're talking about, and you need to educate and etc. etc. I think a couple of things which comes to my mind. First of all, if you're talking to say 40 odd investors, be ready almost without not even a trace of scrupuleness there, to let 10 of them never understand you. Absolutely fine. Last thing you should do is try to impress everybody all the time. You need to impress one or two, and that too in that state of moment, right? When you can make them sign on a dotted line. Sorry if I'm sounding tactical, but perhaps some of these tactics go a long way vis-a-vis, some of those lofty strategic thoughts. That's one. Second, I think do over time with iteration or something, go into a mode where some of these, because you are dealing with a investor who would always have a attention deficit thing. The large number of industries they look at, they can never be an expert. They can never understand your conviction. They can never see the way you do. So to do a communication, again the humbug rules of, put it very simply, talk about this is a gap and give an interesting twist to it. Never talk about obvious stuff, but the things which makes it, which are so-called myths, or don't be a myth buster. It may give you a very different connotation as well, but things like that, being able to show that, communicate your idea in a manner where you are not only educating, but at the same time giving the nice little twist about the differentiation, I think can go a long way. And it comes with practice and maybe comes with a lot of reflection and thinking and preparation and all that stuff.
Sorry, I'll just add one more thing to it. If after educating and going through all of that, now if they put you in that box that you are the same, do you make that effort, or you understand it's waste of your time and not worth enough to take that stance?
It's a judgment call, yeah. It's a judgment call. I know you are talking to a person, you can take him to the water but can't make him drink, make him or she drink. So there is that element too. Be ready to, I would not say walk out, be ready to take peace with the fact that there is some dissonance and a dissonance of cognitive type which they will not understand you. Perfectly fine. But at the same time, don't make it a regular thing. There are some who has to understand you. If they have not, then perhaps there is something which is you need to change. It's a very judgment call. Don't try to impress everybody all the time.
Cool. We had one question at the end. Yeah.
Hi, I'm Gaurav. Thanks for the session. Quick question, very operational, but taking you back to your journey when you started, the first deal that you had with any bank, any BFSI,
First
Deal.
First deal.
That you had with any one in banking or NBFCs, etc. How did you navigate through the loops of InfoSec and regulations in your first deal? And how was that journey like? Could you take us through that journey? I think a lot of people who are building anything in finance, tech, or BFSI might be facing those challenges.
Sure. I mean, perhaps you know the answer, or at least so I believe you know the answer. But see, my sense is when you are trying to strike a partnership with a player of prominence, be it your first or second or whatever, the rules of the engagement are as follows. Different words, being a hustler, as somebody say, or to put it more colloquially, or in Hindi, saam, daan, dand, bhed, everything works. What I mean by that is right from relationship, sometimes top down to a junior person, to showing a technical expertise which is rather very different, to be a constant, just being there, always present, doing that extra mile which can, trudging that extra mile which can make a big difference. All of that works. In my case, when I was doing, it was a combination of relationship and just helping them in many other things beyond the core topic that we were on, just to have that right positive equity and also to communicate that we are not here as a fly-by-night, like just because we are new. We are showing a different level of commitment, almost unimaginably different. Can go a long way in creating a very, very good impression, and hence expediting some of the partnership that one is. Sometimes now again it may sound like for B2B guys, sound like a very cliched thought, but a very important one. When you're dealing with this business entity, to understand their organization, where are they coming from? What are they? I mean, being a good listener, and listener at different levels. A CEO may have a different point of view versus a second level and third level. Can go a long way in the way you approach them, build partnership, and build, get to the closure point.
Fantastic. Cool. Any last questions? Yes, the man in the jacket.
Myself, Paul. Thanks for having me here. First, Antler. I have two questions actually. One is for the Antler and one is for you.
I'll let him go first. Yeah.
So, Antler is a very big name, right? So, many good investments, great. And when you're betting in startups, what you look as we don't have the privilege of studying in big universities or IIMs. First thing, we have a very good idea, and in the same idea, there's a very few players which is successful. We are also want to join there, but in a different way. As Ranvir said, we want to add more products which give a convenience for that. So what you look at a person or the idea or how we can execute. So what you, as an Antler, what you look at?
Yeah. We don't look at degrees. As he said, it's good, but it's not the only thing for us. For us, the most important thing is how obsessed are you with what you want to do, right? See, there are very few things that we can measure at inception stage, right? When you say I am, it's a way of measurement. It's not anything else, right? I think somewhere people forget why this whole IIT, IIM, McKinsey, these are all signals that you are obsessed to win. Unfortunately, in India, these are the only signals, right? Because we don't go to Olympics, right? So, if for example, in our global cohorts, there are Olympic swimmers who are a part of founding a company, right? Because that is a marker, right? But unfortunately, in India, we don't have that, right? So yeah, that's why we rely on them. But that's not the only thing. It's pure obsession. How much have you thought about it? Have you met customers? As you said, right? Is this an idea that's come because you sat in a room? That's it? Or have you gone and met 100 customers? Right? Have you looked at some data which is crazy, right? And has got some insight, right? What is the unique insight? Right? Something has to stand out. Like one of the things that we always discuss internally is the founder has to teach us something, right? And that is where it's an unlock, right? And after that, obviously, how you think of it, everything else is really for us the next level, right? So it's about how obsessed you are, how much have you thought about it, how have you thought about it, is it a hobby or a business, right? A lot of people think hobbies can be made businesses. They can't be, right? So unfortunately, we are also you should never forget venture capitalists. It's not our money, right? We've raised it from someone else. We are giving it to someone else. We have a fiduciary responsibility towards people who have given us money. The promise that we make to them is in 7 to 10 years, we will identify potential unicorns, right? Whether we do it or not is secondary, but that's the promise, right? So you also have to think about, can this become $1 billion business, right? In 7 to 10 years, right? And this is like Kissht is a great case, right? Like next year, he may end up doing 300, 350 crores profit. You give it 30 times multiple, it's a $1 billion business. It's as simple as that sometimes. But yeah, that's what we look for. I hope it clarifies. Yeah.
Next question is for Ranvir. Actually, since you found the company and ups and downs of the company actually. So when do you feel we have to raise the money? One thing is, when we raise the money, we know that so we have to the escalator, we get help from the investors on many things, right? And second part is they chase us. Why? Because they invested on us and their money is us. So both are there, right? So do you think bootstrapping is the one which you can look forward? Or in the fintech, actually, I have read about two things, right? So the concept of FLDG, which we have to put some money from our pocket to the bank so that they can give the money back. Always it's safe, but if somebody has the money to build the company, but not to put to the banks as FLDG or what are the safety guarantee. So what do you think? As a startup, it's better to have a backed by a venture capitalist or to bootstrap?
My serious advice, and I say with some level of conviction, is to not bootstrap. There are many things you lose when you do that. You lose that time. It almost becomes sometimes a cop-out to say you're not able to convince, go out, talk about your idea, a differentiation, and many more things that we discuss, and raise capital and excite a bunch of people. It's no great thing if it is only in your head. So first, I think you asked many questions in your narration, but so let me just try addressing questions. So first is, of course, go for fundraise as against trying to bootstrap. Second, I think it's flat out mythological to say that you need a huge amount of capital in fintech. There are enough and more business model where you don't need to give FLDG also and still can participate in that, right? If you scratch the surface, get into the model, there are models like this. But for me, I'm also a believer that as a founder, you should always keep one leg always thinking about how can I raise more. Of course, you reach to a stage where you don't need capital, but having that lens is very important, because at the end of the day, as much as we talk about great idea, great founder, great this thing, even the availability of capital can also be a big moat, can help you sail through the uncertainties of cadences of the external world perhaps far better than otherwise. So yeah, raise more.
Awesome. Thank you so much, Ranveer. This was super fascinating. I hope everyone had something to take away.